Hello, everybody. Let me know if people can hear me okay, and I'm going to share my screen. Obviously, this is our first Discord webinar, and we want to make sure everything is working smoothly. So feel free to unmute your mics, and let's make this an open conversation, especially because we have a pretty small circle at the moment. And I think this might be better to kind of have a more roundtable vibe than our normal meetings where it's me just talking to everybody.
Can hear you loud and clear.
Hello.
Hi, Brian.
Awesome. So I will share my screen here in just a moment, and we can get started with some new features. We're going to spend maybe 2/3 of the time showing off some new features, maybe more like half, because there aren't a crazy amount. But the other half we'll kind of spend more as like a traditional This Week in Crypto call, and we can do it in a more open-ended fashion than usual. I'm actually going to debut my transaction volume profit loss Sandsheets model that I've been working on. And I'm just making sure it's prepped before I share. How's everyone doing today as far as any trading goes, any reactions to news that has been happening? Feel free to jump in and say hi to everybody, talk a little bit about what you're seeing, or even just to introduce yourself as who you are in our normal community. I'd love to hear from you for just a minute or two. That includes our staff.
Hey, just to shortly say hi. This is Max, also known as Balvesh. If you contact support on any of our pages, I'm one of the people you might be talking to.
Yeah, thanks, Max. He's been a very prevalent person here. Yep, we can hear you.
Cool. This is Jimmy. I go by Solar Fist. I just wanted to say hi. I'm on my phone, so I'm not going to stay on here for very long. But I've been using the platform for like 6 or 7 months now.
Nice. Yeah, great to hear from you, Solar Fist. I've talked with you many times on Discord.
Yeah,
it's going to match the name to the voice.
Cool. Looking forward to this, man.
Thanks, brother. Yeah, really appreciate you being part of the community here.
Yeah.
Cool. Anyone else want to jump in before I show off a few new features on the platform? Like I said, we'll keep this very open-ended. I have until the end of the hour, so you have plenty of time to go over anything, and we will take the last third to go over market updates. Okay. So I'm going to start by showing off what I think is probably our coolest metric that we've added in quite some time. I haven't seen any other platforms do this. So this is a Santiment original metric that isn't just unique for the sake of being unique. This is probably, in my opinion, one of the top 5 alpha metrics that we have immediately. Just as soon as it's been introduced, I've seen quite serious evidence of how prevalent it can be. It actually breaks into 3 different metrics. We have, of course, the traditional ratio between transaction volume that is in profit versus in loss. Then we have daily on-chain transaction volume in profit and daily on-chain transaction volume in loss. Basically what these do, if I highlight volume and loss, this is showing the amount of transactions that are recognized on the network as a transaction of any amount of Bitcoin, whether it's, 8 decimals of Satoshi or a full Bitcoin. It sums all of them together, assuming that Bitcoin is in an address that is trading at a price now that is lower than when it was obtained. So in other words, it's in loss rather than in profit. And the big spikes, as you can see, I'll highlight right here, this one right here, that happened right at the bottom, right, on January 21st. That is a very clear indication of how powerful this metric can be. It is essentially a bottom indicator. Works a little bit like sort of exchange inflow and outflow, where you see the big inflow spikes. That is more of a sign that there's an incoming amount of coins that can be sold off. When there's a big outflow, that's a sign that coins are moving to an external wallet for the purpose of holding those coins safe, and it's more of a bullish sign. So this is more like the outflow end, right, where loss of transactions is more correlative with a price bounce, and then transaction volume in profit is more correlative to like an exchange inflow spike, where you see that these spikes come in when people are ready to take some profit. Obviously, this will be heavily caused by whales, and we'll get to that later in this call. But whale transactions are very much aligned with a lot of these spikes I've noticed, because they have such a high percentage of these transactions have such a high percentage of whale transactions within them. You'll often see both, and I can even try overlaying them together, but you'll likely see a lot of times where whale transaction spikes happen, especially in profit. You know, that is when whales tend to make their moves, and then you see corrections occur. So if you see both spiking all, like together, it's a very good sign that there's a local top forming, and that's exactly what this metric is good for. So you'll often see, like right here, for example, our largest, it looks like, yeah, right next to this one. So this happened right at the top here. You know, prices were at 59.1. By the next day, they were down to 54.4 after this bar. So you had time to react as soon as this bar formed. And they form in real time too. Obviously, as many of you know on Sandbase, if it is a counting metric, one that throughout the day gets larger and larger, it may have like an incomplete status, like the current day or current, right now I have it on 12 hours. So you can see the current 12 hours is very short compared to the rest because it's incomplete. And that is why we have, if I can close that, Sandbase is being a little laggy, bear with me. There we go. So if I go ratio, re-add that. Okay, so that's why we have this ratio, because no matter what time of day it is or how far into the current candle we are, we're going to see that the ratio of transaction volume in profit to loss is always going to be relevant. Because it's a ratio, and it doesn't matter whether there's millions and millions of transaction volume counts or 7, right? Because we're counting by the amount of transactions in profit versus the amount of transaction volume at a loss. So when we see really, really low marks like this is a good sign because it's favoring transactions at a loss. And that would make sense considering we just experienced and still are kind of on a dip right now, going from, you know, just this past week, it got down as low as, about -9%. Now it's about -8%. That's legitimate, and it makes sense that people are making large amounts of transactions while they're at a loss. And that's why you just saw this current candle that ended from the last 12 hours or so being one of the lowest, looks like the second lowest of the last 6 months here. That's pretty significant. So that would be a good sign telling us that a bounce likely makes sense here. If we continue to see low bars, that's a sign of capitulation, where people are essentially getting rid of their bags. They're in too much pain. They don't want to go any lower. I have found that it's more reliable to find local tops with this metric than it is bottoms, but both are relevant. It's a little hard to see when the bars are really low, so a little hack that I've learned that you guys can try would be to go to combined metrics, and we only have one metric here, but I'm going to take off the X2, and I'm just going to say ratio of daily on-chain transaction volume in profit to loss, which is represented by X1. And I'm going to say -1. And I'll just call it, I don't know, ratio updated. And then I'm going to take off the original, and I'm going to switch this to filled area, which is the way to actually show negative values. And now I've successfully changed the ratio into something that isn't just 0 to infinity. It's anything above 0 is in profit, anything below 0 is at a loss. And this gives a little bit more of a clear picture. I can zoom out here and just look at like a weekly view. And things become a little more clear, right? It's a little more like the way we look at exchange inflow versus outflow, where positive is very clear, negative is very clear. And just looking at the last 7 days, you can see that at the end of 7-day candles, you typically see the corrections occur. Boom, right here at the end, that's when we had our all-time high, and then a huge correction right after. We can see here, there was a big correction at the end of the year of 2021. And then as soon as we started seeing transactions happening at a loss, at the end, remember, it's not during the week, but when you're looking at something this macro, it's at the end that you want to look at, and you'll see, prices start to at least even out. You can even see that right at the end of it, we got a nice uptick. So if you were really following this metric closely, you see a nice spot where you can essentially actually get a little bit of a profit during this downturn. It isn't much, and yes, we were still in negative territory when things plummeted off of a cliff here on the 21st and 22nd, or 19th, 20th, I should say. And finally, we started seeing people taking transaction in profit again, even though we were way lower than we were here. And that's because there was a lot of dip buying going on here. So people had some shorter-term dip buys and basically said, from this very base to the very top here, they said that this 11% uptick was plenty, and they just took profit here and took profit here. And even though prices kept going up, this eventually was the top. So again, this huge spike was correct. You can look at it sort of like the larger the spike is, the more confident the correction or bounce will occur. And quite clearly, we saw that the second largest spike correlated with the top, the largest spike down correlated with the bottom, and then once again, the largest spike over the last 6 months on the weekly scale correlated perfectly with the top. And we're right now in a very short sample size, just the last 24 hours so far, showing a severe ratio favoring transactions in a loss. So that's essentially how this works. I want to open it up just for a couple of minutes to see if people have questions about this. Trust me, it doesn't matter if you're a noob, if you're an experienced trader and you use Sandbase all the time, ask away, and we're here to kind of give you a little bit of insight as to how you can use this optimally. So don't worry whatsoever, no matter what kind of question it is.
Okay, I have a question, Brian.
Please.
So, for example, yesterday I entered a position. I thought it was a really good position, and I got shaken out. Is this something that can kind of help you prevent from getting shaken out during these times?
So I would definitely call this like a swing trade metric more than anything. Like on the 1 day, you can clearly see pretty precise times where when you get into extreme bars like this, it will definitely open a path to show you when tops and bottoms are forming. It's certainly not, just like any other on-chain metric, it's not going to be perfect, and there are going to be times like this where you'll see that there's a huge transaction in a loss spike happening, and then prices continue to go down, right? And you'll get frustrated and go, it told me that there's going to be a bounce and there wasn't. But overall, it seems like there's a pretty high level of confidence here, where if you stick with what's going on here on the swing trade side, you'll be successful. On the 7-day side, it looks like there's a higher degree of confidence. So if you're looking more on like a week-to-week hodling strategy, you can see something like this on, right before the war was announced on the 24th. This was on it looks like the week ended on the 23rd. So even here with some of that real-time fundamental news happening, you can see how many people are transacting at a loss. And this would give you a lot of confidence that holding your position and not being shaken out is the right strategy. Because this perfectly predicted that people were capitulating and you just had to remain strong. So I do think there is definitely some alpha in preventing people from getting shaken out with this kind of metric.
Yeah, that's exactly what I was thinking when I was looking at it. That's cool, man.
Yeah.
Thanks for answering that.
Of course. I really like it. I really want this to be one of our leading metrics, and that's why I'm working on this model here. Right now, I've just made it off of the whale transaction template, which I'll show in a minute. And it's very simple. It basically shows right now the 4-hour change in, don't mind the labeling because it still shows whale transactions right now. That's all going to get updated, and I'm going to do a few optimizations to make this more relevant for transaction volume and profit versus loss. But it's essentially showing the 4-hour percentages, either showing a ratio that is positive, meaning there's a high amount of profit being taken for something like AMP, or something like Centraland, Engine, Celsius, where you're seeing a 4-hour transaction spike toward the loss side. So transacting while these altcoin traders are already well underwater. So you want to be buying theoretically when you see these negative spikes for these types of assets, and you want to be taking profit when you see these types of spikes on the profit side. We can see that Bitcoin is just about dead even right now, but check out Ethereum. And this makes sense because Ethereum has seen quite a surge over the past couple of weeks before coming to a halt 2 to 3 days ago after peaking, a little above 3,500. I don't know if it hit 3,600, but around that range. And it's come back down to earth a little bit. So there's been a lot of profit taking. This was a signal showing us that Ethereum was getting a little bit too overbought. And we can see that by switching this to Ethereum. And look at all of this profit taking that was happening on the way up. So yes, this is a little bit misleading because we were seeing a lot of spikes already. And that's why I think a little more granular on this can be a little better. And if you wait for the highest spike, like right here, that's when a local top occurred. One of the highest spikes, another local top occurred. You can see it pretty clearly too. Sometimes there's a delay, but that's a good thing, right? We want to have a little bit of time to react because we've seen with like exchange inflow spikes, like the correction is almost immediate, like when you see the big spikes. But here, you see the spike here on the 7th, and the correction doesn't really occur until the 10th. So you would have had 2 to 3 days to get out and at least take some profit before seeing that it's time to get back in a little bit if you're following this metric exclusively, of course, and the spikes start going toward the loss side again. So I think this can be an extremely important metric for us to integrate into our This Week in Crypto updates. And you've already seen me put up a few tweets showing extreme spikes for Bitcoin, Ethereum, and a few other altcoins. And this should be really helpful. By the way, these smaller numbers, this is going to show like the 48-hour changes. I might change the timescales. I could even show like 3 different numbers, but I don't want to get this chart too cluttery. We'll do like a short term, a midterm, and then like a long term percentage change all on one chart. I love to have as much information as I can on the Sandsheets models. So if you have input on what would be like ideal short, mid, and long-term timeframes, just fire away. And I want to try to go with like a group consensus here, so it's easy for everyone to use no matter what kind of trader you are. All right, moving on. So this feature has been on the platform for a couple months now. I think like even 3 or 4 months. but many of you are still asking a lot of questions about how to use it and what exactly it is. And to give everyone some context, what I did in this metric here is I combined the daily active addresses and the daily active deposits into one chart here. By doing so, man, full screen is still being weird. I wonder if it's because I'm screen sharing and it's just not coming up properly. But regardless, the way I do this is I'm going to take any two metrics. Let's say I want to combine funding rates. That's a good one we can look at really quick. So we can say, give it a refresh. All right, let's go with two different 1 hour funding rates. So I'm going to go DYDX and FTX. And notice I didn't hit the chart yet after hitting the first one. And as a result, this pop-up comes down at the bottom where you can click the word combine. And I now have this pop-up that shows me the two metrics. I can name the metric. I'll just say average exchange funding rate. And I'm going to take these two, and obviously since it's an average, for you mathematicians out there, you just put that in brackets and divide by the amount of metrics that you're combining, which is 2. And I'm going to just hit combine, and then add the metric as usual. Let's make this a filled area chart, which is the hack to show the line between positive and negative. I'm going to zoom in a lot. Let's look at just the last week. And because we're on a 1 hour interval, this is extremely granular. This is showing us when Ethereum's average funding rate is getting into positive territory versus negative territory. And we immediately see that the local tops occur when the exchange funding rates on DYDX and FTX combined are highly in positive territory. Now, it's not always going to be the case, but usually when we see these big spikes, big local tops occur, that's when liquidations happen. Here. This was interesting. This happened after a big dip, and everyone was trying to long, to buy, and then it went down further. So generally speaking, that was correct. And then eventually we saw a lot of shorts coming in here, and as you can see, that's when short liquidations were happening and price was rising once again. So the moral of the story is combining different metrics together on an asset can be hugely beneficial. You can even go cross asset. So let's say I want to go, let's go FTX funding rate. I'm just going to hit combine right now. So right now I have the Ethereum FTX funding rate. Let's combine that with the Cardano funding rate. So we've got Ethereum not showing because we already have that metric highlighted on Sandbase. Then we'll have Cardano. Then let's go Bitcoin, because who doesn't like a little Bitcoin? Let's add one more. Let's go, Tether might be too weird. Let's go Solana. And now we have 4 different FTX funding rates for 4 different top 10 assets. And we'll just say, let's go top 10, even though there's only 4, I get it. Top 10 funding rate, average, plus X3, plus X4, put those in brackets. The total amount of metrics are 4, so we're averaging the 4 funding rates together. Hit combine, and we can actually do the same thing cross asset and see what kind of funding rate we've seen for several of the top assets in cryptocurrency. And when things are getting positive, like we saw here, oh, look at that, huge drop off. And then suddenly we get super negative, we see a nice bounce. Yes, it stayed negative and prices fell further, but you really want to look at the extremes, just like any other metric. If you see something like this, pretty good confidence that prices will turn around, because the crowd is putting their money where their mouth is and shorting up a storm with some of the top assets in crypto. And you can see right now, they're still shorting, which is a good sign. This is actually the second lowest ratio we've seen in the past week for funding rate among these 4 top 10 assets. So that's an example of how to use combine to your advantage to find some interesting alpha. Now, if you're looking for something that is pre-configured for the example I just showed, which is funding rate, you can go over to the funding rate model. Right now, there's an available one, but it isn't fully updated, and I'm going to change that probably later today. And there will be a link that we'll share on Discord, or we might even announce it straight on Twitter. For our Sandbase Pro users, you can have this funding rate model, which shows around, I think it's around like 70 to 80 different assets here, and shows whether they're in short territory, neutral territory here in yellow, or long territory in red, which we can see 0 of these top 150 or so assets, which we have 80 of, because not all of them have relevant enough funding rate data. It'll show you whether they're in short, mid, or long range right now. And if you want to hunt the assets that are at their most short, right? Like, so if you want to long against the crowd, you can look at assets like Axis, Dent. You can look at Kava, Waves, which makes sense. A lot of people don't think that huge surge that Waves was on these last couple of weeks was real, and they're trying to ride the wave back down, pun intended. And then you'll see these squares here showing the last 8 hours where it was. So Kava was at 0.002, now it's down to 0.006, so it's going down. This will show the last 16 hours, the blue square, and then the really small square will show the last 24 hours. I think this is a really nice snapshot of where you can measure the shorts and longs coming in and how to react appropriately based on what the crowd is doing. We've talked many times about, weighted sentiment and how people are perceiving assets on Twitter and Discord and Reddit and Telegram posts. Well, this is them putting their money where their mouth is and actually shorting and longing on the exchanges. So, whether you think someone is being truthful in their commentary, this cuts through the noise and simply says, all right, well, where are they putting their money? And most of them are shorting rather than longing right now. And we can see that further by looking at this average chart tab, which I really like. It's showing in the blue bars here, the Bitcoin price over the last 48 hours. Each bar represents 1 hour. It's on Pacific time right now, but you can change it with a copy you make. I'm on Pacific time, so this is useful for me to find when funding rates are super high or super low. And we can see, as of this hour, Bitcoin funding rates have gone solidly into positive territory. They are longing on the exchanges that I'm tracking at the highest rate they have since this one big spike that occurred about a day and a half ago, 6 p.m. Pacific on the 5th, my time. And we can see usually when Bitcoin's funding rate, this was kind of an anomaly because it happened very quickly and then went back into short territory. But if we can see multiple lines where the funding rate is positive, that tends to be where corrections occur. It's not always going to be the case, but if you see a trend happening for long enough, you'll usually be in a pretty good spot. Now, the purple line is altcoin funding rate, and this one's a little more tricky. It's taking all of the altcoins combined, so basically every single funding rate here, putting them together outside of Bitcoin, of course, which is here in positive territory, which we can see is represented by this line. It's taking all of them together and blending them to see whether they are combined in short territory, which they are now, or positive territory, which they were very briefly about 48 hours ago. This won't always matter unless Bitcoin is also in short territory. So you can see that, as of 4 to 6 hours ago, both Bitcoin and altcoins were in short territory, and we actually saw an eventual small rise, and then eventually Bitcoin started getting pretty close to neutral territory. This is essentially neutral, so you can look at it at this is essentially no shorts, no longs in either direction. It's right there stuck around zero, and that's when the top occurred. So when you see Bitcoin in short territory, the altcoins also being in short territory is very relevant. But if you see, Bitcoin's longing while altcoins are shorting, that's pretty tricky. It might indicate that the better investments for those hours where this is the scenario is to be in altcoins instead of in Bitcoin. But remember that it's going to be pretty dicey because Bitcoin, if you're seeing a significant amount of longs, there's a risk at any time for prices to go down. You want to see both, Bitcoin and altcoins in negative territory for a sustained amount of time. And that tends to be what leads to the best results on rises. And obviously, this is an interesting example because the past 48 hours, the price has plummeted pretty significantly. But on a typical 24 to 48 hour scale, I've noticed a pretty dominant trend of when Bitcoin and altcoins together are in green territory, prices tend to do good things. And if altcoins start to rise too much, that's when even Bitcoin will start to correct because the euphoria for altcoins is starting to end, and Bitcoin, people in Bitcoin, especially whales, are watching when altcoins are starting to dominate, and they know that if they push the price down at any time, it's going to immediately stop those altcoin rallies and push the altcoins back down, and then they'll rinse and repeat and start pushing up Bitcoin again. So this is really interesting. I'll have a link for everyone probably later today on this funding rate sand sheets model. We also have a whale transaction model, which I mentioned was used as the template to create the transaction volume and profit versus loss model, which focuses very similarly on percentage change over time intervals. Again, I have it on a 4-hour change for the big bars, and then a 48-hour change for the small font here. When you see something like this going on, Litecoin, huge whale transactions on the 4-hour basis and on a 48-hour basis, that tends to be a signal for a price direction change. Let's take a look at Litecoin and see just how true this was, because we have seen some very interesting stuff going on with this particular asset. Whale transaction count, and we're specifically looking at the the amount of whale transactions that are at least $100,000. And look at that. This is exactly why the model is showing some massive spikes right now. It's clearly, let me zoom in a tiny bit, just go to the last week. Clearly showing that there were some massive transactions being taken by these whales, or anyone who has $100,000 or more in their wallets, which are generally going to be whales. And then soon after, we saw a correction occur. Generally speaking, like I said, this is going to signal a price direction change. This one occurred right at the top before a bottom occurred here. This one, we saw an interesting cluster of them on the 4th as prices were rising. I think because Bitcoin, we can switch this to Bitcoin really quick. Let me lock this as Litecoin. If you don't know about the locks, guys, just click on these 3 dots, hit the lock, and you'll see this lock icon occur. And now when I go to Bitcoin, you'll see that the whale transaction count stays on Litecoin, but now we're looking at the price of Bitcoin. And it seems as though this cluster didn't have an immediate correction because Bitcoin was staying pretty flat. And there also wasn't a huge direction move, either positive or negative at the time. Generally, the whale transaction spikes work best right after a huge plummet or huge increase has occurred. So something like this was very good alpha because we saw that right after a big drop, that's when a bunch of $100,000 plus spikes occurred here, and we saw a rise before whale transactions kind of neutralized. When they neutralize, that's when everything's up in the air and you want to look at other metrics. But this is the kind of chart where you want to find direction price change indicators. And so spikes are when you're going to see the most relevance, whether it be here or here, there's a big spike on the downside leading to a rise. This, it's interesting. This one occurred when prices were mostly flat and then prices rose. I would like to see a little more evidence of whether this whale transaction count spike continues or whether it stays pretty consistent, but or whether it goes dormant, I should say. But regardless, if we look at whale transaction count, it does show a ton of alpha here. I just want to check out Ethereum because it's shown some pretty nice stuff as well. That's part of the problem. It's showing 15-minute. Let's switch to 4 hours here. So there hasn't been a ton of major spikes. I saw obviously the largest one happen on the 31st, and it did show that there was a short amount of time that whales were really accumulating here. And it took about 2 days before we really saw the impact of this accumulation, but this would have been very relevant. More accumulation here, this would have been relevant. And then it looks like they accumulated here and then dumped here. But you really want to just look at the extremes, right? When there's a massive direction push in one direction, like right here on February 24th, this was wartime, huge whale transaction count spikes, big drop off in late January, huge whale transaction count spikes. Another one here. These were all accumulation spikes, guys. So these are bottom indicators, which I know a lot of people are trying to look for more of those all the time. And I think that, especially for the larger assets, these spikes can very, very clearly predict when the bottoms have occurred, especially when there's a big trend downward and you're wondering how low it's going to go. If you're riding this wave down and you don't know when it's going to happen, you can zoom into like 1 hour here. You want to wait for like a spike like this as confirmation that the bottom is in. Or the top is in, right? Like you see a big spike like this, that's a direction changer. So I think whale transaction count is a really good new metric. We've had it on the site maybe 3 or 4 months now, and I've loved it. Another thing that people may not know is that we now have full Cardano metrics. For a while, it was basically just considered another non-ERC20 that was limited to mostly social metrics. And now we have mostly full on-chain metrics. And I also wanted to show that our wonderful devs have put up an embed chart pop-up where you can actually just go to the embed chart button here, and it'll show a preview of the chart that you're going to embed. Before it was just a link. You'd see this code and you'd say, copy code to wherever. But now you can correctly see how it's going to look after you embed it to make sure it's exactly right. You can adjust the width, you can adjust the height, figure out whether you want it to be in light mode or night mode. If I click that off, you'll see it recalibrate and show what it would look like in light mode. Whether you want the grid to be on or off. You can put on the metric settings, which is cool. So you can keep that on, or you can just take it off. I think this is a huge, huge win if you have your own website or want to paste it somewhere for your own community. Being able to preview everything is amazing. We're about 40 after. I just want to look at a few other things that have been recently updated over the last couple of months here. We had a sorting of the transaction table get fixed, so now there's a little more smoothness on the top transaction table. For those of you who don't know what that is, let's go to Ethereum here, type in top transaction table. You'll see it pop up right here. Click that, add it to the chart, and you'll see it start to populate below the chart. We'll give it, we'll make it like last week, just so it's a very short-term amount of data to compile. And okay, it just went for the last month because it was already loading. And we can see there are multiple ways to sort. You can go by time, you can go by the largest values in top transactions. You can even look at where it was from and to, and you'll see that the labeling has improved. Assuming we know that the address is, a centralized exchange or decentralized exchange trader, or a whale, that would typically be, an address with $1 million or more in that in the address, whatever the asset is. You'll see it clearly labeled here, so you can actually check out what the transactions were, where they were located. I'm sorting from largest to smallest, so we can see like on March 23rd, there were actually 2 separate transactions where a centralized exchange trader sent to another centralized exchange trader wallet. And if I open up this wallet, we can see that it was temporary. Let's go to the last month. So that this is when this transaction occurred. Clearly there was nothing in the wallet. So this was, it did exist as a wallet since at least March 7th. Let's go back to last year, see how long it's existed. Yeah, so this wallet has it's existed for a very long time, but it was never used up until March 21st or 22nd. Suddenly it has 182,000 Ethereum in it. And since that time, go back to the last month, they've gradually been moving a little bit of it out, not much. It's still got a ton of Ethereum in it, 168,000, but you can actually track any of the individual wallets on here to see how the total balance is shifting after it was moved to that address. Or you can look at what happened to the sending address. It looks like it's going to last 3 months. So, wow. So this is a massive, no, not that massive, I should say. But it looks like that wallet, interesting. Yeah, so for whatever reason, that wallet was the sending wallet, but there were probably some other Ethereum moving into it around the same time, which is why we don't see a big change here. I don't know. This actually is weird to me because they sent 173,600 Ethereum, but it doesn't look like it's really moved much. So maybe bad example. I don't think it's a bug. I think there might just be something inaccurate about the sending address, but I can promise you guys, this is more or less a very accurate way to look at where the addresses were sending from and where they were going. You can even look at the transaction hash here. So it'll open up the Etherscan page and you can see when it occurred, the exact time, everything that you would normally expect here. It just pops that right up for you. So if you want to track individual whale transactions, this is a great way to go. I love it a lot, and you can get some major insight as to especially what kind of trader it was and where they were sending to. Typically, this is a good sign if it's like an unknown address and it's being sent to a known whale address. That's the sign of some accumulation happening. Just out of curiosity, if we look at March 8th when this occurred, let's see if it had any impact. March 8th, around here. Yeah, I mean, that's around where the local bottom was, right around here. We saw that it stayed flat for another week thereafter, but eventually prices really began to rise. So I really like to look at top transactions if it's some unknown address or non-whale address and moving to a whale address like this. Okay, any other things I can mention? The screener here, we now have filters for MVRV. So we can go to MVRV and look at any assets with an MVRV in the negative here. So I have this pre-filtered, and all of these assets, Bitcoin, Tether, not Ethereum, interestingly, because Ethereum has been on a run, but Bitcoin has a negative MVRV right now, which is why it's showing up here on the screener. And you can quickly just sort through any asset that fits the description of a negative 30-day MVRV asset. You can, of course, still look at the price tree map or the price bar chart. And we're only looking at those assets that are below 0% here. So you'll see no Ethereum, all of that stuff. I think that MVRV is one of the most useful metrics to look at on this screener. So great job to the devs adding it on. I hear someone unmuted and might want to say something. For those joining the call late, feel free to chime in and ask questions. This is more of an open roundtable type of call. So I want to make sure everyone feels free to do so. We also added several new assets. I don't know any of these assets, admittedly, but ALI, FRTS, GENE, TT, ZIG, these were all just added to Sandbase yesterday. We've got cookie preferences updated, alert use cases. There are more alerts. For those of you who don't know how to go to alerts, you can simply go to My Alerts from your avatar. These are some of the ones that I use. I don't really have my Telegram enabled, but things such as social volume going really low or really high. Anytime a top 100 asset goes down 10% in an hour, that's something that I find very interesting. Anytime a top 100 asset is in social trends, that's a good one, because obviously when we see an asset being talked about, especially on a big price rise, that is a very good sign of a local top occurring. Prices tend to go down about 12% over the next 2 weeks once it's in the top 3 on our social trends page. For those of you who don't know about that rule of thumb, we back tested that significantly. Age consumed, social dominance, many different ways you can set up alerts. And if you ever want to make one, you can create a custom alert. So this is brand new. We can look at the asset right here in the drop down, and we can say, all right, let's look at Shiba. As far as the metric and conditions, let's make it daily active addresses more than, this is a big guess because I don't know how many daily active addresses Shiba has, but let's say we just go by percentage, and let's say that daily active addresses, 100's a lot, 50% up in the last day. And then we can choose whether we want the notifications to be on Telegram or email or a public channel even. We can say the channel name and it'll automatically pop up there. That is brand new and a really cool feature. I think this is related to, so here you can just choose what type of notifications in a clear pop-up. You can connect your Telegram here, even add push notifications, which I haven't tried. And you can actually say, I want a maximum of 1 notification. So if you're worried that it's just going to spam your Telegram or your email, you can choose how many total you want to use. And then you can choose whether you want it to be public or just private for you. So if it's public, other people can explore it on Santiment, share with one another. And then you just hit apply changes and it'll pop up in your alerts. So we've had alerts for a while, at least for the last couple of years since I've been part of the team. And it's really useful, especially if you're on the go and you don't want to constantly check charts. And you know that, anytime MVRV 30-day goes below 15%, that's when you want to be notified. You can set everything here and have it come straight to your Telegram, email, what have you. Any questions on these new features that I've shown here? All right. So we'll take these last 10 minutes here to just do a quick market update. And again, this is something where you can unmute your mic at any time. Let me know if you've seen a certain chart on Sandbase that's showing some nice alpha right now. And we can explore that. If you want to see one or two altcoins really quick, we can do that too, but we do have a hard stop in about 11 minutes, so keep that in mind. So I'll go over Bitcoin in the meantime and just give a quick update on what we're seeing here. Clearly, circulation and daily active addresses have more or less been flat, maybe a very slight uptick in circulation over the past week, but nothing really that exciting to write home about. We'll see if things have changed here on the utility end going into tomorrow when we do our official This Week in Crypto call. MVRV, so we talk often about the plus 15% versus negative 15% thresholds as extremes. I was having a chat with one of our community members yesterday about how they were waiting for things to get to plus 15 or negative 15, but it never got there before a correction occurred. And they were left holding a bag because they thought that it might climb all the way up to 15. That's not how we want to view MVRV. Basically, there won't always be extremes reached. I mean, we can clearly see all of this chopping that's been going on. This has been happening without the MVRV reaching plus 15 or negative 15%. For those who don't know what MVRV is, it's essentially the average trading returns for anyone who entered positions or added onto their positions in the last 30 days. The higher it is, the more likely that the coin is overbought. The lower it is, the more likely it is that it's oversold. You want to be buying in on these extremes when you see huge negative spikes. As we can see, the percentages did go below negative 15%. So this was a very clear historical sign that in almost all scenarios, there will be at least some sort of price bounce. Same here, went below negative 15%, but that won't always be the case. You can look at this as kind of a confidence scale. The higher it is above 0%, the more likely a correction will occur. But if it's just barely above 0%, prices can definitely still climb. Once you see more extreme, at least double-digit percentages in the positive territory, that's when you'll see price retraces. Same on the negative. So right now, we're very, very slightly in negative, which is a good sign after being in positive territory for pretty much the last 3 weeks or so. We're finally in negative territory, meaning there is a very slightly smaller risk in entering a position than Bitcoin compared to the usual time period. Weighted sentiment, I did get confirmation. Oh, Ivan looks like he's trying to talk, but his mic isn't working. Let me read his comment that he wrote to me really quick. Wanted to shed some light on top transactions issue. In this case, the address got those funds and sent them out immediately. So this isn't seen on the balance chart as it is using bigger intervals, and these funds were in there for seconds. Okay, thanks for that clarification, Ivan. I appreciate that. So in the case where something is extremely quick on the Ethereum network or any network that we have top transactions tables available, you might see an anomaly where the amount of that asset doesn't go up or down in that chart that we looked at. Weighted sentiment, I did get confirmation that this is correct. Keep in mind it's on a 7-day scale. So this extreme negative spike is legitimate, but it's on a short-term scale of just about a day right now. Regardless, it's actually very good to see that there's a ton of FUD happening on the Bitcoin network right now. People are doubtful that a bounce will occur right now. Supply and exchanges, we have seen that the amount of supply of Bitcoin is starting to move up a little bit, which is rare. We can see that in most cases, the price moves, the supply on exchanges is continuing to go lower. We see an exception between October 18th through the 22nd. It was moving up a little bit, and what do you know? There was a big local top during that. And generally, we want to avoid being in an asset when the supply and exchanges is moving up. The more up it's moving, the more concerning it is, because that's a sign that coins are moving to exchanges where the ultimate goal would be to sell. It's usually not to buy more if you're moving supply onto exchanges. So that's a bit of a bearish sign when you see it. And we have been moving up, so this is definitely a concern over the past week. It isn't a huge move up, but regardless, when you see a trend like Bitcoin where supply has moved down so consistently over the past year, and suddenly it's moving up a little bit, consider that a yellow flag. I mean, we saw a big one here between mid-April after the first all-time high last year, and it went all the way up until May 19th. This would be a sign that a price drop could be imminent, and sure enough, during it, on May 9th or so, May 10th, boom, huge plummet. Quick whale update, very important. Let's make sure to get the correct tiers that we typically look for Bitcoin, 100 to 10,000, confirm them. By the way, Ivan and any other devs watching, we are having a full screen issue right now. I don't think it's related to Discord. This has been an occasional issue on our platform, so we'll get this fixed up for everybody soon in case you're having trouble like I am with getting anything to show up on the full screen mode. But regardless, here on the smaller chart, we see that there's been a consistent downtrend going on for most of the past 5 to 6 months since October. They were holding 49.5% back here, and now are down to about 48% now. Not what we want to see. We want to see these key tier Bitcoin stakeholders accumulating like they were here between May and August, and not declining like they are now. So that's a bearish signal. Exchange flow balance, not a lot going on there. Network realized profit loss, nothing huge. We did see some major spikes on the positive end. This works very similar to transactions in profit versus loss, where the big spikes are going to forewarn of corrections. We saw a big one right here, right before a correction occurred. Big one right here, right before a correction occurred. And then on the other end of the spectrum, huge negative spikes would be the times where people are trading at a loss, and you'll typically see a price rise right after it, like we saw in this bunch of negative spikes. Development activity, not much to say. It's pretty much business as usual for Bitcoin. Social dominance, I'll ignore volume for a minute. We do see that there's been an overall decline in commentary related to crypto overall. So that's something to note, but that's not necessarily a bad thing. What is a bad thing is when we see social dominance continue to go down over time. I've noticed that like 20% or more is typically a healthy range for social dominance. And if it's below that, prices can get pretty dicey. We saw it go below right after this first all-time high in October. And yes, there was an eventual all-time high the second week of November, but you can see how much altcoins were the topic of conversation. And that's why Bitcoin was really starting to decline in the amount of discussion related to it. It did have a slight rise going up until wartime, and then it really plummeted to, I think this was around a 2-year low here on March 23rd. And yes, prices have been able to rise since, but I'd be wary when you see a huge downtick like this in dominance related to Bitcoin. So it is up a little bit, around 14%, but it's below that 20% threshold right around here that I typically like to see as an indication that Bitcoin is being talked about at a healthy rate. Age consumed, not much of a major spike. And we already talked about how the ratio of transaction volume and profit to loss did see a big spike right at the top about a week ago, March 28th, 9-ish days ago, and has been below ever since. So considering how low it is right now, that's a good sign, meaning that there is a high amount of people transacting at a loss right now. And whale transaction count, pretty typical at the moment, not much to say either way. Look for a big spike like one of these as a sign that the bottom is in, considering we are on a downtrend right now. Any questions for just a minute or two, and then we're going to take this offline and just chat on Discord.
Brian, maybe not a question, but I wanted to show one thing.
Please.
We've been, Can you open, and by the way, thanks for very nice showing of existing features and analysis.
No worries. Thanks to all for tuning in. What would you like me to open?
Balancer, BAL. Not a metric, a coin.
Oh, that would explain why. I was like,
So,
I've never heard of the balancer metric.
Yes, this is a new one. I wanna show one thing we were analyzing today and go to balance by either amount of addresses or total holdings.
Total holdings. Do you mean like
yes.
what would the metric be called?
I think it's called balance by addresses.
Got it.
So there is one specific pattern which is one of the sweetest one in classic finance, and especially so in crypto. This at the moment because it's showing up regularly, and it's a process of both building the bottom and the first part of push up or recovery, and it can be analyzed in a specific way. This is a wall of worry after the prolonged bear market which we had for 3 months. And in this case, what you want to know, it's the first few pieces of theory, is to spot relatively small, not super small, but relatively small holders who are exposed to feelings probably the strongest. They're active, they want to get their portfolio grow 100 times, so they're exposed to high risk and high reward game, and they're experiencing therefore quite strong emotions during the game. It's typically somewhere around 10,000, 50,000, maybe up to 100,000. In gains of balancer, I think you can take the group, you can press merge, or first deselect all of this, and command press any, yeah, exactly. Now we need price of balance, of course.
You want me to add the price to the chart?
Yeah, without price difficult.
Got it. There's the
Okay.
price.
Yeah, this is the price. Now, we take the group 1 to 10 and 100, 10 to 100 coins. And you merge it. You merge it.
Okay.
You merge it both.
1 to 100. Confirm.
Actually, 100 to 100, 100 to 1,000, 100 to 1,000 too, yeah.
So all the way from 1 to 1,000?
Yes. So that's a kind of, yeah. And what is the time frame here? So can you make it shorter? It's like, I think it's...
yeah, it's the last year, so I'll go last 3 months.
Yes. So, and we want to see here the last period of building the bottom, which was, according to chart, like end of February till 15th of March, let's say, in this way. We recovered and then still made almost like the new bottom, yeah, exactly this period. So they've been increasing their balances for this group quite substantially, kind of buying in the confidence, okay, now that was the last tip. But as the price made this last bottom and start recovering, they were not convinced anymore. So this is the wall of worry which you see now from your pointer to the right side for the next 2 weeks. This is the ideal setup for wall of worry.
So what are you saying in terms of that wall of worry? Is it this major
wall of
uptick?
worry means you're not acting. No, you're not acting. You're not buying. You're concerned. You don't want to buy, even though you've been buying before. You've been buying into falling price in conviction that it's at the bottom. But the moment price started increasing, you're actually either not buying or you're selling. So you're worried. You're concerned. And that's been the case since the last bottom. And then it will flip at specific time, at some point of time. It's always like you never know when. It will flip where you see, okay, they start buying again. And it's an indicator often of at least temporary top. So this specific pattern you will see over and over again. And yeah. Maybe for clarity, I can share it then later on our Sunpress Pro with clear cut into the sections. But I wanted to bring it up as we were today discussing market, and then Gary brought balancer because we were pumping recently and some edge is growing. And then I saw this, which I constantly see. I say, okay, let me bring it to our talk today. It's one of the sweetest patterns.
Very interesting. Yeah, it's also cool to see just how much whale transaction counts have predicted the tops right here on the 30th.
And if you analyze further, you will see how the big holders behave. But I don't want to spend much more time. Just to give encouragement using this metric, where you split into balances, and you depends on the project size. Typically, for this size of project, everything up to 10,000 or even actually 50,000 considered to be active, but still small holders. They will be acting quite enthusiastically, and they'll be experiencing motions, and it will be reflected in the metrics how the balance is changing over time.
Gotcha.
Yeah,
thanks for sharing, Max.
Yeah, you know that we're using it for Bitcoin, but it's a different game. Here's more immediate reaction you can see.
Absolutely.
Yeah, that's it.
Thank you. All right, guys, unless there are further questions, let's take this offline, talk a little more in the general chat about any of the new features we discussed, other ones that we may not have discussed that you've noticed and want to have more clarity on. We're here to help you. So whether it's related to the markets and you want to just talk about, where things stand after this mid-sized dip that we've experienced these last couple of days, or you want just more clarity on how to use the platform effectively to improve your profitability, we're here. So drop us a ping. Really appreciate you all coming on the call. I'll give it about 30 seconds if anyone wants to unmute. Otherwise, I'll sign off myself, and I want to thank you all for being a part of this.
Thank you, Brian.
What's that, Max?
No, just said thank you once again.
Yeah, thank you for jumping in with that balancer inside. Alrighty, guys. Thank you so much. Appreciate everyone's time. I hope you all have a wonderful Thursday as we head toward the weekend here, and expect some more updates on our Twitter and our Insights page coming up today and tomorrow. Hope we see you all in about 24 hours or so for our This Week in Crypto call. Maxim and I are looking forward to running it back and doing some more. Talk to y'all soon.